restaurants and stuff there.
Okay, so thank you for coming. There's quite a few people that are watching us online, and so we will be starting our session. We started a little bit late because a few people were coming and they're stuck in traffic. So, anyways, because this is online, so today quite a few people prefer to stay home and watch it online through live stream. Today's topic is mainly about the real estate market update and what's going on. And I think the main question is whether the real estate market is going to crash or not. So I will play this video. We will watch it together and then we go from there and I will have a presentation.
It's the largest investment that most of us will ever make, and lately it's also mysterious. Home prices in Canada have seen incredible jumps over the past decade. It's led to some to speculate about an imminent bubble bursting. Well, it's not quite a bubble, according to BMO economist Salvo Terry. He says the market looks more like a balloon. I talked to him earlier and asked him to give me the difference between a balloon and a bubble.
Well, we distinguish a balloon from a bubble in that for a bubble, prices have become so overinflated that you don't even need a pin to burst it.
the strong housing market just settle a little bit rather than correct sharply?
Well, that's our best case scenario. That housing market will cool down, will stabilize. Prices essentially will change very little over the next couple of years across most regions in the country. And that will allow incomes to continue to rise and catch up to the higher valuations across the country, hopefully in time before mortgage rates go back to more normal levels in 2, 3, or 4 years' time. That doesn't mean some parts of the country are not a bit stretched. Vancouver, parts of British Columbia are highly inflated, and we are seeing those prices spread to some degree. But across most of the country, we're not worried about the housing problem.
All right, Sal, thank you very much for this.
Welcome.
Sal Terry is a senior economist with BMO.
Okay, I would highly recommend that you guys watch that channel. I mean, sorry, that program. It's every day during the week. It's at 7 o'clock on CBC. It's interesting program about business and what's going on in business world. Anyway, so today's topic is about real estate market outlook. My presentation is till about 11 o'clock, and then at 11 we will have a representative from Scotiabank that will come here and present about RRSPs, and how you can take advantage of RRSPs for your first-time buyers and how the whole thing works, and they will go into details. But for the first hour, which is this presentation, is about what's going on in real estate. And I think as agents, you might come across this question almost working with every client. They will ask you, should I buy now, or what's going on in real estate market? Is it going to go down? And it is, I think, a discussion with most of the people that are thinking of buying and selling, because these days it is discussed in the media quite a lot. It's everywhere. People are talking about housing bubble, that it might crash, and so that's why it is something that people are talking about. So that's why, first of all, I think today what I will do is discuss and bring and present some of the articles that are published in the past month about this topic, because there has been a lot of writings about this issue. And then I will give my reading of the situation. Most of the articles that are published, you will see that it gives you mixed messages. That some of them are very pessimistic, saying that the prices will fall. Some of them are a little bit more optimistic. So we will go through them. And the first one that was published, it was sometime beginning of the year. It was in Canadian Business Magazine. I'm sure you guys have seen this in most of the convenience stores and bookstores and wherever you go, and there is a magazine. So they were predicting that real estate prices will fall. And basically their analysis was that they were bringing the major banks that they are thinking that there is increase in housing supply, and of course there is a high debt, and we are at the peak of real estate, and that's why prices are likely to go down. In the same article, they're quoting Bank of America that they're predicting it could fall 5 to 10% this year, and maybe as bad as 25%. This is their prediction. And they're thinking that because, explaining that why the real estate market is hot right now, their understanding is that people are thinking it's going to go higher and higher, and they don't want to miss the boat, and that's why they're into this buying, and that's why the real estate market is hot right now. So this is their explanation of the situation. I think this graph kind of summarizes their point that why we are in trouble. This blue line represents the interest rates, and the red line is the housing prices. At this point in 1999, so about a decade ago, they were at the same point. But look at how much they have now you can see a big gap between interest rates and housing prices. At one point, they were somewhere here that was close to each other. So I think that the concern is more in the condo market. I mean, you guys know what is household formation, right? That means you marry and make kids. So they're saying that these condos are sold twice the pace of natural household formation. So that's why it is risky, and that's why more than half of these pre-construction condos are owned or bought by investors. And again, this is more of a kind of a specific targeting condo prices. They're going to fall as much as 15%. But at the end, I think they kind of conclude that the prices will not increase for the next few years. This is their kind of firm conclusion at the end of this article. Now, something else came up that I think you guys just watched the video at the beginning of this session, the difference between a bubble and a balloon. A bubble is something that if you just poke it, it will burst and then it will fall to the ground. But balloon is more of a slowly, as the video was explaining, the prices will be having a much softer landing. This report came from Bank of Montreal, and they were claiming that rather our housing in Canada is not bubble but balloon situation. That means the prices will come down, but it will rather come down slowly. This report came end of January. And so basically they're saying that it is unlikely that there will be a sudden correction in Canadian housing market. Although they're saying that the prices have gone up, and that's why this is not a good situation, but it is not a bubble situation. It's not something that prices will fall substantially. Of course, I think if you watched that video and paid attention, they're saying that if some shocks to the system come about, for example, if interest rates go up by 4%, then that means there could be a trouble, because people cannot afford the mortgages that they have bought these expensive houses. And I think the shocks that are explained in those in that article and report is basically these four things: that the interest rates will go up by 4%, or there is a recession, which already there is probably recession in Europe, but that turns out to be a really bad, deep recession that will affect Canada. In Europe, I'm talking about, or there are big job losses, or the prices will go even higher, much higher. That means it will become unaffordable. These are the shocks that the report came from Bank of Montreal. But the chance of interest rates going up by 4% is probably unlikely it will happen anytime soon. So this was the major concern, that if the interest rates go high substantially, then people may not be able to afford. So for example, if someone bought a $500,000 house today, with today's interest rate somewhere close to 3%, they might be able to afford. But if it goes from 3 or 4% to 6, 7, or 8%, then people might be in trouble and cannot pay those mortgage payments. Basically, that's what this says. But again, these guys are predicting that at the end of the day, they're thinking that mostly it will be a flat market for 2012. Okay, so this is another report that came February 1st. Now I'm presenting these different opinions and theories and predictions because each one is kind of different. So as I said at the beginning, some of them are really bad, some of them, but I think as a real estate agent, as an industry expert, as a person that you're working in real estate, you have to be aware of these resources and you have to know what's going on in your market, especially if you want to feel confident when you're working with your client. They will ask you a question, and you should be able to answer and handle those situations and questions. So this was a report, actually, this was an article in Toronto Star about an arm of CIBC. It's called First Line. They're providing mortgages. They are no longer accepting applications for the stated income. That means people that are self-employed, those are called the stated income. So if you're an employee, you take your pay stub to the bank, and it shows that you're making X amount of dollars per month or per year annually. But if you're a self-employed, then you're claiming that you're making that much money, and then you're having a lot of expenses. That's how the tax system works. Those kind of buyers they're no longer accepting it. But I think because of that issue, some mortgage brokers are thinking that because banks are coming very harsh at this issue, this could lead to a made in Canada problem, because maybe there is no problem, but we are creating the problem by being panicking about it, right? So actually 13% of the buyers represent these so-called self-stated or self-employed people. So this is a big chunk of buyers that CIBC's First Line, which is an arm of CIBC that's providing mortgages, that they are rejecting those people. It's a big number, 13%. That's a lot of people. So this is something that, again, people think that these self-employed and people, the newcomers to Canada, are somewhat similar. The loans that are given to them similar to the subprime issue in U.S. This is an opinion of some of the people in the financial industry. So that's why they want to. These people will be the first people that they don't want to give money. But I think, again, in the same article, they're saying that the people that are at risk is much lower than U.S. It is somewhere close to 5%. In U.S., of course, it was. So I think to compare even the self-employed to the subprime issue in U.S., I think those are totally two different animals. But I think basically that article in Toronto Star ends up that by having an area of concern for these 4 areas, that the prices relative to incomes have substantially increased, and more people are buying, and they're having more loans on their shoulder. There is higher debt, and builders are overbuilding. So looking at all these 4 factors, some of the experts are predicting that that's why we are in trouble, and they want to be more careful when they're giving loans. And again, from the same kind of source, this article was also claiming that prices may fall as much as 25%, which is a lot of money. So if you bought a house for 600, it will be worth 450 or 400. A big difference. Now this is another magazine. Now all these things are happening for the past few weeks. Probably for the past 4 weeks, there is a lot of discussion. I mean, if you're an agent and if you're following the market, there is a lot of discussion in the industry about this topic, that real estate prices are going to fall, and some people are saying no, it may not fall. So anyways, I'm trying to present you different points of view about the same topic, and how different people and even different organizations and different institutions might have a different understanding of the exact same situation. Now, even they are a little bit showing concern. By the way, this is the cover of, I did not take this from Facebook, but this is the cover that this article was in that issue of the Economist magazine. They also showed some concern in their predictions that the prices may fall. I think their main area of concern comes to that there is a lot of investors that are coming from out of country, especially from China and Middle East, and they're parking their money. They're buying a lot of condos, sometimes even all the way up to 5 units, and they're just buying it for investment purposes. So they have money, and they feel that Canada is the safest place to bring their money, and that's why they invest, and specifically in new construction and condos. So, and again, basically what they're saying is that because the interest rates are so low, and because of the interest rate being so low, it makes it more affordable. So this balloon could get bigger, and one day it could burst. That's their point. Now, just a few days ago, I mean this past Monday, there was a report released by Toronto Real Estate Board. And despite all these negative reports that we have noticed so far, they are the report in Toronto Real Estate Boards. I mean, the prices instead of going down went up. So far, from Bank of Montreal's point of view, from different articles in different magazines like Canadian Business, Toronto Star, and The Economist, that we noticed, kind of most of them were predicting negative market. But the report came from Toronto Real Estate Board, and it was just the opposite of what they were predicting or what they are predicting. Kind of that the Toronto prices are still going up. And this report actually, as you can see, the prices are going up 2.7% compared to the last month, and actually 4.1% higher than last year, last January this time. Okay, so now I'm trying to again open, as we said, I'm opening these different reports that are published in the media. Toronto Real Estate points of view is that we see some positive signs in the US, but there is still concern in Europe. So as you know, if you follow their reports, which are called Market Watch and published monthly, they have some interesting points of view. But it boils down to this. They're saying that because interest rates are so low, despite concerns of recession in Europe, still buyers are feeling more confident. I mean, we are real estate agents, and you know that when people buy houses, they say, how much is my monthly payment? They're less of concerned with price of the house, they're more concerned how much I can afford it. So basically that's what they're saying. This is Toronto Real Estate Board saying that because interest rates are so low, it gives more confidence to buyers to buy it. I mean, we have seen as low as 2.99% by a couple of banks, Bank of Montreal and Royal Bank. They were offering 5-year fixed 2.99. I think that's the lowest I have seen, although a couple of days ago they stopped giving that loan because there was a lot of demand. By the way, they're quoting the president of Toronto Real Estate Board. And I think what they're basically saying for 2012 is that because there is a lot of increase in prices, more people will put their houses on the market. And because more listings will come in the market, eventually there will be more inventory in the market, and that will lead to a little bit more softer landing. Hi.
Sorry I'm late. This is a seminar, right?
Oh, at 11.
At 11, not now.
Are you from Scotiabank?
No.
Oh, okay, welcome.
I'm an agent.
Oh,
Okay, thank you.
No problem.
Do you need a card of mine?
No, it's
No,
okay.
okay.
I thought you're from the bank.
No.
Because the bank is coming at 11.
Oh, okay.
Yeah.
All right.
No problem. Feel comfortable. Anyway, so, where I was. So basically, the Toronto Real Estate Board is trying to say that because there is some kind of growth in prices, that will entice and encourage people to put their house in the market, and then we will have more houses in the market. That means we will have more inventory, and that will slow down the prices. That's what they are saying. And they are basically in the second half of 2012, we will have more houses in the market. Right now, because of lack of inventory in the market, there is even sometimes multiple offers. It's still in this market, which we have concerns about Europe recession and whatnot. So this was their this is so far that's what we were doing. Now, for some of you that have just came, and for those of we have actually quite few people online that are watching us. So if you have just joined us, what we have done so far, if you missed, we have brought different articles and reports from different financial institutions and a couple of magazines, trying to bring different perspectives about real estate market. And most of these articles were published within this year, so for the past 1 month. And I have gone through them, probably 4 or 5 of them so far. This was the latest, which you might think this is not about real estate, but I will tell you why it is about real estate later on in my presentation. This was the report that just came a couple of days ago about the Canada's population. That if you go to this website, by the way, well, I don't have it here, but basically if you type Statistics Canada, this clock is moving and it shows how many people are increasing every minute. So we are at about 34 million, more than 34 million people, and 238 people just came. The population increased by more than 200,000 just since July, which is 6-7 months. Now, in this report, which was, it just came on a couple of days ago, February 8th, most of the growth is coming from the immigrants. So 2/3, which is about 60-65% of the population growth, is from people that are coming from out of the country and settling. And then we are leading in G8 countries in terms of population growth. So that means more than any country, including US, Germany, Italy, some of the major countries in Europe, people still prefer to come to Canada. So we are the leading country in terms of population growth. Overall, Canada's population grew by 5.9%, which is a little bit higher than the last census, which was between 2001 and 2006. So there are more people that are either born here or coming from out of the country. Now, I think there is an interesting point, by the way. How many of you watched this report? It was for a couple of days on CBC. Has anyone watched this? No? Not?
I watched.
Okay, none of you? I think, especially for the past couple of days, this was a major news. It was major news because there was some apparently bad news for Ontario. As you can see in this chart, that the population of Ontario, which is in red for this period that we are talking about, compared to last period, it decreased. You can see that, right? So last time it was probably a little bit more than 6%. Now it is a little bit less than 6%. And probably a lot of these people went to Alberta, which the population increase is more than 10%. As you know, economy is driven by people moving into a place. You talk about housing, you talk about rent, you talk about selling cars, you talk about anything that has to do with economy and selling, it's about population. So, unfortunately, in mainstream media, there was a lot of concern that Ontario's population is decreasing, and I think the way they have portrayed, for an ordinary person to listen to the news, it was a very bad news. But I will show you why it is not as bad as it sounds, and I will show you why. In the same report, all media ignored this. Because I'm following media, and none of them mentioned this, that Ontario's population in the same period grew by about 700,000. Now compare this to Alberta, which is 350. You know, what unfortunately the media gives in their report is always percentages. When you for example, one of these places, Saskatchewan, it shows a very substantial increase. If there is only 1 million people in the whole province, if you add another 60,000, it makes a big difference. Do you know what I'm saying? So percentages always deceives, and it gives a wrong perception of the situation.
Same like national average of anything, right? Like
Yes.
even the prices, right?
Yes.
Like in the housing market,
Yeah.
there was one article I was reading, like they suggested, they say like, we as a realtor should always ignore what the average is. Don't worry about that because
Yeah.
the market is too local.
Mm-hmm.
National average has nothing to do with us.
That's true. So averages usually, even sometimes averages of houses within a local market. For example, a new condominium is built in Markham, and all of a sudden it affects all the averages in that area. So averages doesn't make sense. You have to look at actual numbers. So when you look at actual numbers, there is a 700, almost 700,000 people came to Ontario, compared to Alberta, which is, although in terms of percentages, this is like 10.8%, and Ontario is only 5%, but we are talking about people, not about percentages, right? So I think if you compare, you add all these three big provinces like Alberta, British Columbia, and Saskatchewan, add all this, it comes to 700,000, and Ontario alone was almost there. This is something that I had to go to the report to find out. Unfortunately, most of the time in headlines of the media, they just want to say negatives to attract eyeballs in their newspaper or yes. So unfortunately, they don't mention that it's not that all bad as it sounds, right? So at the end of this, although some of you have not been here from the beginning of this session, I want to know, what do you think about real estate market? Do you think it will fall? Because some of you that just came in, there are people that are predicting that it may fall as much as 25%. And there are people that are saying it may not fall that much, it might be a little bit softer landing. So what do you think? Not of this lady, but of the real estate market.
She's thinking.
Basically, like if you go to the fundamentals of our economy, like as that lady just quote, right?
Mm-hmm.
It says like a median income, like compared to the housing price, like it should not like 1 to 3 ratio, right? But right now is 4.6, right? Which is not sustainable according to the statistics.
Right.
But on the other hand, like if we take into account all the economy in Europe and also in Asia, especially the housing prices like in India and China, they are like going like spike in the spike, right? So and most of the people like whosoever are coming from these countries, they're bringing a lot of money in here to invest and also to live over here.
Mm.
And as you have said, like in the G7 country, like we are still the leader in the growth, and we are very peaceful country so far. So I don't think that as they're predicting that we could go like at 15 to 20%. Like I personally think that maybe it can just plateau this year, but not too much.
Yeah. Does anyone else have any opinion?
I think historically, looking at these experts who give this opinion, for the past 10 years, I've seen that they have been saying that we have reached the peak and it's going to go down. And I haven't seen any decline, it's just going up. And mostly it's because of the economy here. So as long as the economy is good and strong and people have work and they think they can afford, which it seems that way right now here. So I don't think that it's going to fall, or even I'm not sure that it's going to fall even a little bit in the near future for the coming few years, because it's like you showed also that people look at how much can I afford. So as long as affordability is there, it's probably going to continue, and also the interest rates probably won't go up as fast either, because previously countries or the banks used to raise interest rate to solve some economical problem, Like, but nowadays it's the opposite. They want to reduce the rates when there's problems in the economy, because they know that before, when they used to raise interest rate, it used to cause more problems, right? So I don't think that they're going to raise the interest rates either that drastically.
Right. I think I just want to come to a point because my next slide is exactly about this. This is not my picture, but I think what I want to show that, trust me, as you was saying, sorry, I don't have your name.
Binyar.
Binyar. As Binyar was mentioning, no one has crystal ball. For the past 10 years, you name it, the so-called experts and senior experts and these people that are working with major banks in this country, and they're working with major institutions and earning a lots of money to give opinion, they have been proven wrong. In 2008, I remember, because we had a very soft few months in real estate market. I think in some places prices fell for 10% or more in some markets. No one would say that we will have prices increase after 2008. No one. I did not hear it.
Not even 1%.
Yes, but look at 2011 or 12 when we are much higher than 2008. And I think one thing you guys should, when you read these articles, especially your clients, when they're reading it, they're not informed about, some of the things that's going behind these issues. So they will have questions, especially in this market this year. I will kind of guarantee that if you work with most of your clients, whether they're selling or buying, this will be their question. Okay, Mr. or Mrs. So-and-so, is this the time that I should sell or buy? And I think I would highly encourage you that you should be well versed for a couple of minutes to give a good presentation, not PowerPoint, but in your words, that you have to give your opinion that will make them feel confident that what's going to happen and why. What is going to happen and why. So I think I will give my reading, and again, my reading is as bad as anyone else's, but I think I will give my reading of the situation of what's going on in this industry. First of all, well, I think before I go there, I want to focus more about Greater Toronto area. I don't want to discuss about Canada because we are not selling real estate in Canada. We are selling real estate in Greater Toronto area. We are not even selling, most of us, real estate in Ontario. So of course there are some towns, for example, St. Thomas, close to London, that is doing very bad because they had one big factory and it closed down. There is nothing else there. So we are not talking about, even although we are licensed by RICO to practice across Ontario, but for most of us, we are not selling across Ontario. We are discussing about Greater Toronto area. So this opinion that I'm giving or prediction is more applicable to Greater Toronto area. So my first point, by the way, my prediction, which I will say in my last slide, but it is based on 5 points that I have thought about, and I will give those 5 points. First of all, I think there is a difference between Vancouver market and Toronto market. And when at the peak of real estate, a lot of other major cities, such as Los Angeles or Miami or London, England, or those major cities in the world that right now prices have come down 30, 40, 50%, they were increasing substantially, double digits every year. But in case of Toronto, even at the peak of world real estate, still prices were more affordable. We did not increase double digits every year. We were more in the single digit, somewhere close to 5 to 6, 7% or 8%. So when you're comparing, like, even after prices have come down 30, 40% in US, right now the prices are somewhat comparable to Toronto's market. Do you know what I'm saying? And same thing applies within Canada. Vancouver. Average prices in Vancouver is 815,000, whereas in Toronto, 400. This was, by the way, but this data is a little bit old, but I think it has not changed much. So for the past 10 years, it has increased about 188%, Vancouver. But look at Toronto, it only increased half of that. Do you know what I'm saying? So I think that matters. If we are talking about bubble, this bubble might be more applicable to Vancouver's market. Okay? So that's my first point. The second point is that we have to differentiate between new condo. I'm not talking just about condo, specifically between new condo market and resale market. There is a lot of overbuilt, a lot of condominiums that are coming up, especially in downtown Toronto. And a lot of these articles that you read in media kind of, their focus might be condo market, but yeah. You can have a seat here too if you want. Anyways, so a lot of these articles that are talking about housing market, they're kind of adding this condo market into their equation. Yes, there is a lot of overbuilt. Yes, there is a lot of supply of condominiums. Yes, there is a lot of foreigners that are investing in these markets. And yes, they're all going to come at the same time. 25,000 condos are going to be built or coming to the market this year or next year. I forgot the exact. So in 1 year, 25,000 units. That's quite a lot of units. And when they are built and they will come in the market at the same time. When there is a supply, no matter what the demand is, when you have a lot of supply in the market, it will have some impact. So we have to differentiate between a resale and a new condominium. And I will show you the gap between resale. This is a comparison, direct comparison of condominiums in GTA between new and resale. This is not even just downtown Toronto, this is Greater Toronto area. In 2004, this gap was only 70,000. Today it's 134,000. So that means if you buy exact same condominium as a new construction compared to an older one, it is 134,000 more. So that means that the gap is wider than before. You guys are following so far? Okay, so that was the second point. Although I just want to make one point here. Although these high-rise, I mean, a little bit of a good news about these condos. Since 80s, because of lack of interest from the federal government, they had a lot of interest and encouragement for investors to build apartment buildings for rent. They have stopped some of their programs, so there is not a lot of apartment buildings, rental apartment buildings that are coming in the market. And for an investor, it doesn't make sense. If they make the same high-rise building, spend same money, buy the land, and build all this construction, if it will cost them same, they will make a lot more money if they build a condominium. So that's why people are building more condominiums and there is no apartment buildings coming up in the market. So some of these condos fill the rental demand that's in the market. But unfortunately, some of these units are very expensive to rent, like 2,000, 3,000, 2,500. It may not be affordable for everyone. So some of the units will be occupied by renters. So that's the good news about it. So this is my second point. Now the third point is low interest rates. I'm not sure how many of you followed just a few months ago that the Federal Reserve Bank in US announced that the interest rates are probably going to stay low till 2014. So for the next couple of years, we will have low interest rates, and usually Canada follows US policy on interest rates, generally. And in the past, that's how it has been. And that's why when interest rates are low, it makes it more affordable. And I will show you this in this chart. Royal Bank of Canada comes with this report very often. They publish this report, I think every 3 months, about housing affordability. Now you can see this is condos, this is bungalows, this is two-story. You can see that in 2009 it was less affordable compared to now because of interest rates. Do you know what I'm saying? Well, in 91, when the market crashed, it was not at all affordable. It means you would give 60% of, almost 60% of your income for housing. Now it is higher, as you said 4.6. It is probably 4.6, but it's supposed to be less than 40% of your income. It's still, of course, it is higher, but we are comparing with the trend of the past. It is within the range. That's what I'm trying to say. So that's why when interest rates are low, people don't care how much the price is. They look at a monthly payment. Okay, I think this is another thing, as I was discussing, population growth. Uh, uh, when there is a growth in population, people have to live somewhere. So reports after reports from Stats Canada have proven that immigrants on average live 2 to 3 years in rental, and then within 2 to 3 years on average, of course some of them might go 6 years, some of them might buy in 6 months, but on average within 2 to 3 years they move from rental to buying a home. So when there is a growth in population, there is demand in housing. And that's why, as I was mentioning, some of those condos will be occupied by rentals. But still, the supply is much more than the market probably could observe. And I think specifically in the same report which came out just 3 or 4 days ago, in that report, Canada's population increased 5 times compared to last time. It increased 4.5%, and there are 2.6 million people living in Toronto. Right? So we're talking about where we sell real estate. People are coming here, they're living here, there is a population growth. So that was the fourth, and this is my last point. I think we are, no matter what the media says, and I know our Prime Minister is in China trying to establish trade relationships with China, but we are heavily dependent on US. No one can deny that. At one point, probably still is 75% of our economy was dependent on US. That's a very high number. I don't know how much of it China can take away, but we will be still substantially dependent on US economy. So having said that, so far, as we know, U.S. economy is in a very bad shape. I was in U.S. just a couple of 3-4 weeks ago in Florida, and housing is really bad. Job market is really bad. I think it is really bad because the politicians in U.S. Are not serving their people, and they're not serving the best interest of their country. They're playing game and making this poor guy cry. Literally, they make him cry because every idea that he comes up with, they try to kill it right at the table. So, and I think if you follow the history of elections in US, generally things happen right after election. If you look at even housing market before election, the economy is not good. Then right after election, things change. Of course, things will not be rosy right after election. But what I'm trying to say that things will change in US when whoever comes back in 2013, because then the people, even the politicians, know that we cannot play much of a game. This guy is going to stay for another 4 or 5 years, so better work with him. So based on those 5 points that I say, this is my personal opinion that for the next few years we will have a more flat market. Now this is more applicable probably to resale than condos. I'm not sure about condos. I think I'm still a little bit concerned about new construction. There is oversupply. I think if you're buying real estate today, I'm probably, this is a very long time, but since I'm predicting, let me predict. I will not lose anything. I think for very long time, market will be more or less within 5%. So even if it falls, it will be within 5%, which is not a big loss. But I think it will also not increase. I think because of those reasons that are positive, and well, at the same time there are some negative, when you add them up, this is what I have come up with, that if you buy today, 5 years down the road, pay your mortgage, still the price of your house will be somewhat same as today. That's what I think. Of course, there are exceptions. For example, if you buy and change the use and make money, or if you buy near where the subway system is coming, for example, in Vaughan, those are exceptions. We are just talking general. So basically that is what sums up this presentation, and I think this slide is kind of the conclusion of the whole presentation about my opinion that we will have more or less of a flat market. So it will be more of a stable market. And having said that, we are exactly at 11, and we are supposed to have the Scotia Bank representing at 11. They will be discussing about RRSP, and unfortunately,